Good morning, Coach.
Good morning. How you doing?
Got that workout in. You get yours in yet?
I love it. Not yet. Not yet. I'm gonna get mine in after I get Logan started for school this morning.
How was first day of school?
It was okay. It was okay. Got to get her back in a routine.
She been doing what she want to do.
Man. It'll get better though. She's a bright kid, so she'll get it together.
How old are your kids?
Logan's 5. She'll be 6 next month. We have Naya, our middle child. She's 18, and Aisha will be 25 in November.
Oh, wow. That's a good spread right there. It's a good spread.
That's what they say. All right. Good morning, good afternoon, good evening to all of you, wherever you are in the world. I am your host, Ryan Carthage. Welcome to our Inner Circle Live session for this morning, in preparation for the New York session of trading. I hope everybody's having a great morning or afternoon, depending on where you are. We'll go ahead and get started. We still got some folks hopping in, but as always, turn off all distractions, prepare your minds and your bodies to engage, as you guys always do. Also, just for common courtesy of your peers, our peers, please be sure to stay muted if you're not actively asking a question or making a comment. Okay, just a quick disclaimer. Trading does have risk. We are not CTAs, stands for Commodity Trading Advisors. So the information that we provide to you, the information that I provide this morning is for educational purposes only. We can teach about the technicals, we can teach about the fundamentals, we can teach about everything, all the way down to the trades that we like to take with entries and potential exits. But at the end of the day, it's up to you to press that button to take that trade. Okay, so always remember to trade responsibly and never risk any money that you cannot afford to lose. All right, so what I want to do this morning, before we dive into the charts, is kind of add on to what Benny was discussing last night. If you missed Benny's session last night, the phenomenal breakdown of the wave sequence, what the waves look like, the whole nine. And if you didn't watch it, definitely go back and check out the recording. It was a great session last night. And as I speak up, he pops on the line. My awesome partner, Benny, is with us this morning as well. So if you didn't catch the session last night, please be sure to do so. Did a phenomenal job of breaking down the wave sequence, Fibonacci sequence, and our sweet spots, right? So what I want to add on to that is how to draw trend lines. I know we have a lot of new folks that are coming in. Just to make sure that we understand, Benny broke down what the trend line means, right? It gives us the direction and the momentum of the market. But we want to make sure that we draw them correctly so that we can actually get an accurate view of what that is. Okay. And then we'll hop into some charts and we'll rock through it. All right. So if you guys have any pairs you want me to take a look at the end, definitely drop those in the chat as I switch over to my other screen. And I'll do my best to get to those before we get out. All right. You guys good with that plan?
Yes, sir.
Awesome.
Yep.
Awesome. All right. Benny, how you doing this morning, man?
Doing great, sir. How are you?
Doing well. All right. So last night Benny broke down the wave sequence, right? And let's do this. Broke down the wave sequence last night, right? And right? We know the market moves in ABCD waves. Okay. My bad, 1 second. All right, the market moves in ABCD waves. And what we want to do, right, we want to make sure that we are buying low and selling high. And in order to do that, we have to be able to identify when the shifts in the market are coming. We want to have multiple confirmations that the shift in the market is coming, right? So last night, Benny talked about the Fibonacci sequence, right? And how the Fib works, identifying those key U-turn points in the market. And he also mentioned a 1, 2, 3 rule that we have, right? Which is a swing high, swing low, trend line break, right? And stochastic, right? Whatever indicator that's used being in the buy zone. So when you're drawing your trend lines to identify or to look for when the market momentum and direction is shifting, right? The goal is to get as close to the highest point or the lowest point, if it's a downtrend, as possible, right? Without cutting off any wicks, right? So if we were to draw a trend line, like this, on, we'll just say the daily time frame, right? If we were to draw a trend line like this, these points that are cut off down here, that is an indication of market movement or price movement in the market, right? So you're cutting off price action under your trend line. So you're not actually taking into account all of the activity that happened below these points. So when you're drawing your trend line, you want to ensure that, including all wicks, right? You don't want to cut off any wicks or any candles. You want to ensure that your trend line takes into account all of the price action, like this, right? So that would be the outer trend line, right? And then this would be an inner trend line, okay? So all of the wicks have to be taken into account as you are plotting these trend lines, right? And as price continues to move and shift, right, you get your swing high to form, okay? And your inner trend line, the goal is to get to as close to the highest point without cutting off any wicks as possible, right? So that we can identify when the change in momentum and direction occurs, right? So all of these are ABCD waves. So you could technically, right, depending on when you see these, right, you can have trades at each of these points, right? So if you catch this on the move up like so, right, that B to C move that Benny talked about, swing high, break of the trend line, right, an entry to play the B to C move there, right? Or from here to here, same thing, right? So on each of these waves, there's opportunities to catch these trades, but you want to make sure that you take into account all of the price action that occurs, okay? So we'll look at a live chart to see what that actually means, okay? Take these out for a second. All right, so if we're on our higher time frame, okay, we're on our higher time frame and we're looking to identify, right? So we have our waves, right? We have our Fibonacci mapped out on the screen, right? We're on a daily time frame currently, right? So we want to identify when the market momentum actually shifted, okay? So we start at our lowest point because we're in an uptrend, right? Lower highs and lower lows and higher lows, right? I'm sorry, higher highs and lower highs. So when we draw this trend line, moving to the upside, right? We got a higher low here, right? So a trend line will look like this, right? Because we don't want to cut off any of the price action on the move to the upside. Our goal is to identify when the market momentum and direction changed. Okay. So that would be our outer trend line, right? And we have, make this smaller. Through the wicks, and how we do this, let me back up before I go there. How we do this is we extend the line out, right? And we think of it as a tabletop. Think of it as a tabletop, right? If you have legs going through the table, right, you wouldn't want to sit at that thing, right? So you extend the line out and you bring it up to the next touch, right? So we're going to say all of this to the right has not occurred yet, okay? All of this to the right has not occurred yet. Price is still moving to the upside. So we extend the line out and we bring it up until we get a wick to touch. Like that. We see we had a wick touch right here. Nothing else up until that point. Okay, so that would be our outer trend line. Okay, that would be our outer trend line. Like that. Then to get our inner trend lines, to identify the exact point that the momentum and direction changed, right? Because we want to get as close to the highest point in this scenario as possible, right? Without cutting off any wicks. Okay. Should be there, right? We have a wick that touched right here. Okay. Wick that touched right here on the move to the upside. Price came down, rejected off of that trend line, and then we got a break here. Okay. So this is on a higher time frame. However, right, but the same thing applies, right? Extend the trend line out, bring it up until you get a wick to touch. And then a way to remember it, 1, 2, follow it all the way through, right? 1, 2, follow it all the way through. So now you're able to take into account all of the price action, even on the lower time frames, as we go down, right, in our multi-time frame analysis, we're able to take all of the price action into account. Okay. So new folks, when you're drawing your trend lines, ensure that you aren't cutting off any of these candles, right? Ensure that you aren't drawing your trend lines like this. So all of this price action would not be taken into account on your lower time frames, right? There's price movement in there on lower time frames, as the lower time frames are fractals of the higher. Okay. 1 second. All right. And so as we go down in the time frames, right, go down to the 4-hour time frame, okay, and look at the trend lines, we see all of that price action is taken into account, right? It's taken into account. Here is where price tried to break through that trend line, right? This was our second touch, and we brought it all the way through. Price attempted to break through the trend line, coming back down, didn't happen, and then price pushed up, right? So as you get down to the lower time frames, you can have your trend lines be more aggressive, right, to identify entries sooner. Okay. So in this scenario, right, 1, 2, and follow it all the way through. So this was your touch on the way to the upside. And again, price tried to break through. It broke through your inner trend line, but came back up. Okay. Because this is your highest point. If the market here pushed higher, then we would adjust these trend lines, right? But this is your highest point. Okay. So that was your second touch there. Your next trend line would come like this. Okay. To get as close to the highest point without cutting off any wicks. right? We got a second touch there all the way through. So now the break of the trend line was here. Okay. As we continue down in the time frames, shift it. Okay. As you continue down in the time frames, you get a closer view of what that looks like, right? Might have to make small adjustments as you go, but there you have it, right? So on this 1 hour time frame, you'd be able to be more aggressive and bring the trend line like that, right? So now you have your middle trend lines. I'm sorry, your inner trend line, your middle trend lines, and your outer trend line. So now as you're doing your analysis, as price is moving to the upside, now when you get this swing high that forms, right, likely at a D extension level or B boundary, 118, 127 zone, swing high that forms here, right, swing high, then we get a trend line break, confirmation that the trend is shifting, right? So this bearish close here, we have an opportunity to enter the trade for a move to the downside. Okay, so we'll take a look at this in current time as we do an analysis to see where the market is. So I posted this, Benny talked about this setup last night, right, for the Aussie Swiss franc. And this is where we are currently, right? This is where we are currently. So in order to find an entry on this move, okay, Benny identified the daily. Let's go back to the daily time frame quickly. So that's where we are, right? So we're on the daily time frame here, okay? And if we map our fib from the top to the bottom, right, we saw that this fib got taken out. That A got taken out by the price action moving to the upside here, right? So that would mean then that we start our fibs from the bottom and bring them to the top. Didn't give us the new fib just yet, but that will look like this. Okay, well, this is our highest point right here, right? So we need two days of price action to the right in order for this to be an official swing high, right? But that will be the swing high when that occurs. Okay, so if that's the case, this is our new AB boundary. We'll link that down to the lower time frame, like that. Okay, so that's our new AB boundary. Now, a couple ways that we can look at this, right? This is that daily fib, AB boundary, and price is starting to attempt to make its way to the downside. So if we draw a trend line on this, I'll pull this out for a second. If we draw a trend line on this, right, I'm going to use the ray tool, makes it a little bit easier, right? Bring that out, bring it all the way up till we get a wick that touches, right? Right here is that second touch. And then we allow the line to follow all the way through. So that's our outer trend line. Okay. Then we start from that touch and work to get to our highest point, which is here. Okay. So we bring it through, and the wick of that candle is right there. Right? You guys see that? So we had a shift in direction and momentum at the close of this candle here. They created the B boundary, right? So we're saying, okay, the market direction momentum is potentially shifting. We got a swing high, trend line break. Price pulled back, right? Gave us a 50% pullback, right? Retested an area of resistance and consolidation right here, right? Price came back right into that zone and then pushed out, and now it's coming back to retest that zone again. Okay, but you got that break in the trend line there, and you got a pullback. Okay, so that's how you use the trend lines to identify the shift in direction, shift in momentum, right? And then, right, you place that fib back on there in combination with your Fibonacci sequence. And now you have a new AB boundary, you have a swing high, you have a trend line break, you have points of confirmation to enter a trade to the downside. Making sense?
Yes.
Sweet. Folks that are newer to us, is this making sense?
Yes, it is.
It is.
Yes. Okay.
Absolutely.
All right. So as you guys are doing your homework, right, add these pieces to the puzzle. Okay. If you have to go back and watch support, resistance, and trend line video series, definitely do that, right? Break it down on a couple of days. We'll go back and take a look at it, rewatch this video to really identify those areas, right? And then do your homework and post those in the community. Cool deal?
Afternoon, morning, Ryan, and everyone.
Hey, Fee.
Hey, can I ask a question on that chart?
Absolutely.
Sorry, my internet was a bit unstable.
No, you're okay.
You know, like the way you said it tasted the second trend line and it pulled back off it.
Mm-hmm.
Does that mean I have to, like, hypothetically, I have to wait and then get an entry of going down, or should I just wait? Because I'm not too sure.
Well, you want to get a high price, right? The goal is to have a high price to sell at. So you want to wait to see at this point, right? If you didn't enter off of this pullback here, right? You want to wait to see if price pushes higher, right? Or if you get a reversal in the zone, right? Which is a level of resistance, right? Level of resistance. So you want to see if you get a reversal in the zone. If you get another swing high to form, right? Or you could enter this, you just have to calculate your risk accordingly, right?
Yeah.
But it is possible potentially for price to push higher within the zone, right? So above that A would be a 30 pip stop loss. Okay. So you just calculate that if you would like to enter that there, or you can wait for another swing high to form.
Okay.
You get another swing high to form, right? Or a strong rejection off of this level, maybe a bearish candle to the downside, then you can enter that, right? That's additional confirmation for you. Or you can utilize, right? If you utilize any indicators, the stochastic, right? Wait for that stochastic to get into the sell zone.
Yeah.
Right. Mm-hmm. And then that'll be an indicator for you as well that price is starting to get exhausted, right? We can look for an entry as that momentum shifts back to the downside.
Okay. Yeah, cool. You know, when you explained to me, I can be entering, if I want to enter, I can enter on the B boundary before price push up to the top zone.
Mm-hmm.
Is there any way, because sometimes I come in and the price has already moved and I have a look, the price has already moved. How do is it any alert or something I can put on if I want to, or it's just a matter of watching it all the time? So
you can do a couple things, right? If you utilize the smart trend lines, you can place, I'm just going to put it here just for an example. You can place an alert on that trend line, right? So when that trend line breaks, it sends you an alert. Okay. The thing with the alerts is you have to have the Smart Trader on, so you have to leave your computer on, or
Yeah.
if you pull it up on your phone and leave that browser open, right?
All right.
You can get the notifications there. Or if you have levels of support and resistance that you're watching, right? You can put an alert on those lines, right? Or those levels the same way, right? So utilizing the alerts is a good thing to do when you're on the go and you're not at your computer.
All right. Thank you.
You're welcome.
Hey, Ronald.
Yes, sir.
Hey, you had a question as to whether or not you draw your trend lines or your support and resistance first, or does it matter?
For me, just how I go through things, I identify the support and resistance levels first, and then I draw the trend lines, right? Because I want to see those highs and those swing highs and those swing lows in the market first. And then the other thing is I only draw the trend lines on my 1 hour chart, right? As I'm identifying those potential entry points, right? As you're doing your full analysis, just to get an overall view, right? You, and this is a good rule, right? To see if the trend line has changed or if the trend has changed, right? From a higher time frame perspective, you can draw them on the higher time frame, right? Just to get a view of when the trend shifted, okay? But just to get an overall view from your higher time frame, right? You got to break in the trend line here, okay? So that's something for you to know, right? So Benny talked about last night being on the buy or the sell side of the market, right? And the break of this trend line tells us that we're on the buy side of the market. So drawing them in the higher time frames gives you that view. And then as you go down to look for your entry, right, you keep those there, understanding where you are. And then you come down to identify your entry points. And this is where I draw those trend lines, looking for those precise trend line breaks and entries on the lower time frame. But I do that after, right? I identify my support and resistance, right? After I know where I am from a Fibonacci sequence perspective, right? And now I can draw that trend line after I see, okay, I'm approaching a de-extension level, right? Let me draw my trend lines to prepare my chart for when, for if I get a trend line break. All right, so I'll draw those trend lines because you might have to wait a little bit to draw an inner trend line, depending on how the market is moving. So I'll do it that way. So generally the trend lines are later. Okay.
Thanks.
Absolutely. Any other questions?
That B boundary acted as a pretty strong support.
It did. It
That's
definitely
cool.
did.
Morning,
Yeah.
everyone.
Morning, Ron. Okay. So, but yeah, this B boundary definitely did act as a strong level of resistance right here. Yeah. Right. And got that pushed down. So we could get, right, another reversal in the zone, right, for the push down. But what I would do if I'm not in this trade already is I'd wait for my stochastic to get back into the buy zone. That's what I would do in this scenario. Because there is a potential for a price to push a little bit higher before that occurs. And therefore, you get your high price, and then you can look for that entry back to the downside. Okay. All right. So that's the setup on the Aussie Swiss franc, right? Price is trying to push back up. We'll see if, when we get that reversal to play it back to the downside, right? Last night after folks got off the call, Benny and I stayed on for a second. We were looking at this a little further, and Benny identified a potential crown pattern, right? All right, so that'd be the left tip, right? We got to push up. We got a break of that low. And then price took out the previous high, right? So now looking for the C, right? Left tip for C, the right tip, right? And then it'd be a move to the upside to that de-extension level. right? So that's the potential that we're looking at on this particular setup as price makes its way down. Okay, so this is the selling opportunity, right? That B2C move back down to your 61.8, right into our sweet spot zone, which is right in line with the left tip over here, right? And then the C to D move to the D extension level. Okay, so two potential moves on this pair as price does its thing. Okay, B to C and then C to D. Shawnee, funny. Right, so that's where we are with the Aussie Swiss franc. Right, we're looking for price to continue to the downside. Right, these are traditional 38.2, 61.8, and a boundary take profit levels. Okay, but we're looking for potentially the 61.8 level, right? Level of support to hold, and then potential reversal. So we'll look to play this to that TP2 level. Okay. All right. Let's take a look at while we're on the Aussies.
Ryan, I have a quick question.
Yeah, what's up?
Do you mind going over one more time the crown pattern, the how you foresee the C point?
Yep. So it's a series of ABCD waves, right? And okay, so this is your left tip, right? Push down, impulsive move to the downside. We got push up, right? And if you had your trend line there, you had to break your trend line to the upside, right? And then we got that reversal. So A, B, C, D, right? And this D extension took out that previous low. And then on the reversal, the move to the upside took out that A. I mean, that previous A, right? So that's now this is your A, this is your B, okay? The C, right? Generally, in most cases, is in line with the left tip. So that right tip will be in line with that left tip in most cases, right? So that will be your C, right? And then your extension there, right? So you're looking at the left tip here being in line with and acting as kind of a level of support, right? To identify that right tip. And if you go back and look at some of these levels here, right, you see price stalled here, price stalled here. So that's proving and showing that that's a level of support there, right? Right in line with that left tip and where that left tip stalled. It makes sense?
Okay, I got it now. Thank you.
You're welcome. All right, just remember, like with the King's Crown patterns, right? This low takes out that one, and then price then reverses and takes out that previous high. Right? Those are two things to really remember, is this high is going to be taken out by this move to the upside. Okay. And then you'll get that push down.
Okay, thank you so much.
You're welcome. All right. Let's take a look at the Aussie yen really quickly. Okay. Aussie yen, right? So this is that capital AB boundary here. Price has been moving to the downside, right? So these are our sub fibs to the downside, right? In the up retracement zone. Oops. I'll take these out so we can just track, right? We'll just track these moves here. Okay. So we have this active AB boundary, right? We got a 38.2 retracement, but price stalled at the 118, 127 zone in line with this weekly support level. Okay. And then price pushed back to the upside. Okay. We got a stall here at this daily resistance, and now price is trying to push back down. Okay. So we'll take this down to the 1 hour time frame, right? And we map our fibs on this one. Right? We map our fibs out from the highest point. Right? We had some consolidation. So fib got taken out with that high. All right, some more consolidation. All right, so there's our last high, and this is our active fib here. Okay. So active fib there, right? So we got price stalled up here at this daily resistance level, and now it's trying to make its way to the downside. It gave us just shy of a 786 retracement, and now it's trying to push to the downside. Okay, so that's where we are. So I drew my trend lines there, right? That's my, really it's my inner trend line because we had consolidation. Another point with your trend lines, right? You'll have times where you'll get consolidation in the market, right? So if you draw your trend line, this one just worked out that it came to the outermost point. But what you want to do in these areas of consolidation, right? If you have the inner trend line drawn like this, right? When you identify, right, that price is just moving sideways, you don't get a strong bearish or bullish break, right? You got these small candles here that broke the trend line, and then price pushed back up and never really broke out in one direction or the other, right? What we do is we shift our trend line to the outermost point, right? Because what we want to identify is a strong break in one direction or the other, okay? And if you get some of these smaller moves, right, those can be false moves and just moving consolidation, right? It doesn't give you a firm directional shift. So we shift our trend line to the outermost point of those areas of consolidation so that we can then identify, right? We had a strong rejection there and price closed below, and then price started to move to the downside, right? So you want to get a strong break of your trend line. And in those areas of consolidation, shift them to the outermost point will allow you to do that, will allow you to see that a lot clearer, okay? Just another tip on that. But
Hey, Ryan.
yo,
Also too, because I know we've got all different sorts of traders from, all over different parts of the world. So for those intraday type traders, how you have this trend line drawn now, right? Nice conservative trend line without the aggressive inner trend line. If even this method, even understanding the fibs and the U-turn points can even help you, if you're an intraday trader, if you want to be in and out of the market in the same day, right? So for example, this scenario, just by using the trend line, understanding how price reverses, utilizing these trend lines, if you're the type that's in and out of the market, 15, 20 pips, that's your move off that trend line break. That's your move. So you might be the type that, hey, I don't want to play the continuation to the downside. Depending on the size of the account, you might say, hey, I want to be in and out of this trade. There's your move. So no matter what your trading style, the method can work.
absolutely. Absolutely. Right. And you could have been more aggressive on this, right? You could have taken it there. Or if you shift it to the outermost point right there. Right. So your entry would have been on the close of this candle, a little bit of drawdown. But if you're looking at that 15, 20 pips, as Benny stated, the close of that candle, push down, there's your 20 pips. Right. If you would have held it, 11 pips in the drawdown, 30 pips. Right. So in and out quickly, if that's your style. Great point, bro.
Thanks.
Great point. Right. All right. So the Aussie yen, right? Coming back to retest these levels here, right? So we'll see if we get a reversal from this zone, right? Another area of consolidation that we had, right? So we'll see, right, as price pushes up, if we get that reversal, right? We got stochastic here in the buy zone, right? Wait for it to push to the sell zone. Wait for price to come up to the higher levels within this consolidation zone, right? and that could be a potential entry for you. Okay. If you want to track it a little differently, you want to track the fib on it, right? So that's your AB boundary. You got almost a 618 retreat. Nope, that was the B boundary formation. So your pullback here was the 38.2. Okay. So you could potentially get a deeper pullback, potentially, right? Or price could still use this area, right, as a level in the area of resistance and reverse out. So wait for that stochastic to get into the buy zone, right? Price to come to the higher levels here within the zone for that potential reversal back to the downside. Okay. Oops. That is the Aussie yen. Right, but price came right back up into that sweet spot, right? Shy of the 786 level, right? Excuse me. So my entry was up here, stop outside the A, right? Because price can push deeper, right? So my stop is outside the A to give it room to do its deal. And if it doesn't take out the A, then it'll go my way, right? So my stop on that one, right? It's 98 pips. Okay. Allow price to do its thing to the downside. All right. Any questions on this Aussie yen? All right, cool deal. We had look at the Aussie NZD. Then we'll take a look at the pound dollar. All right, so from a higher time frame perspective, Benny talked about, right, price always being in a range, right? The price has just been moving sideways, here, right? So as we make our way down, we got our support and resistance levels, okay? Monthly resistance, monthly support, and we see price just bouncing back and forth, okay? So in that, right, if we were to map out the fibs from the low to the high, right, you'll see that the fibs get taken out on both sides, right? Price push down, we draw them there to there, right? That fib got taken out by that push there. So we start at this high and work our way down, like so. So on the daily time frame, this is our active AB boundary here. We got a shallow retracement. One of those 20% of the time, price push down, hit that D extension. Now we're looking to see if we're going to get, right, that reversal back to the upside. Okay. Stochastic is in the sell zone right now. So price, you see price is pushing to the downside. Okay. But we're at a level of daily support. All right. So if we go down to a lower time frame, right, we can do the same thing. We can track those fibs from the top to the bottom, right? We can track those fibs from the top to the bottom, like so. Find that highest point, and allow them to go, right? So we got AB boundary formation here, okay? Price pushed down to the 118, 127 zone, and now it's just been moving sideways. Rejected off of the trend line, pushed down, okay? So now we want to see what will price do? Will we get a reversal or will it push deeper, right? We could get another push down, right, to retest this daily support level and then give us that reversal, okay? But for this one, you can be aggressive with this inner trend line here, but that'll be really, really, really aggressive. That would be an aggressive trend line, but you could draw it, right? You got a high and price is seeing, it looks like it's trying to stall here at the support level, okay? But I would wait on this one to get some confirmation, right? Stochastic is in the buy zone. I'd wait for a bullish move to the upside on that, and I'll place a stop below the low, right below this low here, in the event that price pushes down further. Yeah, that's what I would do. That's what I'd do. I'd wait for a bullish engulfing candle to form on the right side of this before I'd enter. Yeah, I'd wait on that one. But potential for it to move back to the upside. That daily stochastic is in the sell zone though, so it could be a shorter move. Right. So I'd only be looking for it to come maybe to TP1, potentially TP2, but I wouldn't look for a lot of momentum out of it just because on the daily time frame, right, price could be still trying to push lower. Right. So your new fib would be like that. So technically you got a 38.2 retracement off of that already. Yeah, that could be a sticky one. So we could get, right, we could be one of those scenarios where price continues to push down, right? You got a 38.2 retracement, but you could get that push down to the 118, 127 zone and then potentially get that reversal from there. So it could look something like that or give you like a crown pattern type situation. Like that. Yeah, so I'd wait on that one. I'd wait and see how that plays out. Yep.
Yeah, there's definitely better plays.
Yeah, 100%. 100%. 100%. All right. Pound dollar. We'll do a fresh markup for everybody. All right. We'll start on the higher time frames. We'll work our way down. Right. Start on the monthly time frame, right? Identify that extreme high and the extreme low. Extreme low. Okay. Now we'll zoom in and we'll get our support resistance levels on. Okay. And for new folks, as you're identifying the support and resistance levels, right? So you want to identify the most recent level. So we got the recent level here and we have this level here, right? They're really, really close. Excuse me. So I like to use zones, right? Visually, I like how it looks for me, but Benny and Casey, they just use lines and their charts are pretty clean, right? Whatever works for you, right? Whatever works for you and your visual needs. Okay. Right. But so that's, I combine these two levels because they're really close, right? And that's the zone that I want to see, right? We've got that high and that high. So that's resistance and that's our support. Okay. So we'll go down to the weekly time frame. Okay. See that high right there. We got multiple levels of support here. So what I'll do is I'll take this level here, right? When I'm drawing my zones, generally I draw them from the wick to either the body of the candle or if there's a wick next to it, right? I'll draw it just to the top of that wick. That means price came back up and retested that level, especially on the higher time frames. I'll be sure to do that so the zone isn't extremely wide, but that price action on the lower time frame shows that price came back up and retested that. Okay. All right. Another tight zone there. And then I'll take this lowest zone and we'll be able to identify these levels on our lower time frames. So I'll take just this lower zone here. Like that. Okay. And we'll go down to the daily time frame. Okay. Slight adjustment there. Okay. This is that level on that was on the weekly time frame here. Right. Change this to red. Okay. This one I won't mark. This is that other zone, right? We'll just take these two, right? And we'll see how price moves. This was the most recent and most relevant one. And we see that we have some wicks over here that kind of confirm it. So we'll keep that one and not mark the lower one. All right. And then we'll look at where price currently is. We'll take this zone here at the top. And we'll mark out these two just because we could get price to stall here. And I'll mark this one here. Okay. They're pretty close, but because I'm not going to mark out any support and resistance levels on any lower time frames in this. So I want to have those areas as points that price could stall. All right. So we'll link all these to my lower time frames. Link all. Okay. And then we will go to our, actually, no, sorry. Right. So look at it from a Fibonacci perspective, right? So we see that we've been in an uptrend, right? Price moving to the upside. So we start our fibs from the bottom to the top, like so. And we see we got AB boundary formed here, right? No retracement, 118 to 127. We got a double top here, and now price is trying to make its way down. Our target is this daily 38.2 level, right? Okay, so we'll link this down to the lower time frame as well. And then we'll take a look at our sub fibs, right? In the up retracement zone, right? Coming to the downside to see where we are as we track to this daily 38.2 level, okay? Right, active AB boundary, we got a 50% retracement. We got another retest of that weekly resistance at that 50% level. And price came down, still stalled at this weekly, right? So we're in a little bit of a range right here, okay? In a little bit of a range. So if we now go down to our 1 hour time frame, okay? Take these out, right? So we got our levels in there, okay? We're in this range. So I'll do this for example, but you see, right, when you move into a range, you'll get those fibs that get taken out, okay? So from the bottom to the top, right, that fib there, you see that A got taken out with price moving back to the bottom. So we'll start from the top and work our way down. Oops. Zoom in a little closer. So that wasn't our high. This is our high there. Start there. And we see we got that reversal, right? So then we start from the bottom and work our way up. So this is our active AB boundary, okay? Now, overall, right, from a higher time frame perspective, right, our bias is short, right? Our bias is short. We're looking for price to come down to this daily 38.2 level, but we know we're in a range here, right? We came to the bottom. Now price potentially is trying to make its way back up to the top, right? We'll have to wait and see on that. But we know the dollar has been gaining some strength, right? So if the dollar is gaining strength, the pound could be potentially weakening. We could be looking for this to make a push back to the downside. So with our target being that daily 38.2 level, my overall bias on this is short, okay? My overall bias on this is short. So with this AB boundary, right, if you didn't play this move from the top, now we're in some of these lower parts of the zone. So we could be looking at a pullback that would occur. For me, because my bias is short, I want a high price to sell if I'm not in this already. So I would be looking for a pullback to occur. Okay. So I'd sit and wait on this one because price could push higher, right? If this fib plays out as it is, and this A doesn't get taken out, right? Price could push higher and give us a move back to the upside, right? But if the momentum for the dollar stays what it is, and we'll take a look at the DXY quickly, right? I want to see this A get taken out, right? I want to see the A get taken out to the downside. And then we'll be able to run our fibs from the top to the bottom, right? And have an active fib to play with, right? So in theory, right, these are just sub fibs for now, right? These are not your active fibs, right? So these are what we call them type 2 setups, right? Which I wouldn't play in this scenario. But price could, right? We got a shallow retracement. Price is trying to push down. We could see price push down, right? Below this 118, 127 zone to take out that A. If that occurs, then this will be your active fib on that 1 hour time frame. And then you'll have an 80-20 play to play that back to the upside, right? So I would wait to see if this A gets broken. I wouldn't be looking to play this reversal, but some may want to, but I wouldn't. But you can track it like that, draw your trend line on it, and allow it to do what it does. All right, so that's through your lowest point. Right. Go like that. All right, so those are your trend lines there. So if you want to play this, right, if you get a break of that trend line in a retest and this level holds, right, you can play it back to the upside, right, to your higher levels. Okay. Or like me, I want to see this A get taken out. If the A gets taken out, I'll drop the fibs from the top to the bottom and then play that AB boundary 80-20 play for the reversal. That's what I'd be looking for on that. Yep. And we got pound news at 11 o'clock. And we got pound news at 11 o'clock. Right. Monetary policy report hearing. Okay. Big time stuff right here. Okay. Could definitely have a impact on the market. Okay. So definitely watch that. Definitely watch for that. All right. So we'll wait to see after this news how it moves, right? If it's positive for the pound, right, we could see that push to the upside occur, right? And if it's not, we could see it move to the bottom. So after the news settles, right, after the market does what it does, then we can take a look to see what occurred, and we'll be able to make our decisions from there, okay? We don't want to play the news, but after the market responds to it, then we can look to see what happened and make our decisions from there. If we look at trading economics, a couple of things that stood out. We had European shares extend losses, right? So the European stocks are moving to the downside, okay? Which we've seen euro strength in the recent days, right? So stock market falling, currency moving the opposite direction, right? And that's ahead of the European Central Bank policy meeting on Thursday, right? So some more policy interest rate conversations happening for other currencies as well. So something to watch. Asian Pacific stocks drop, right? So this one amid concerns about the Delta COVID variant. This one was more geared towards weaker than expected job loss for the US, right? US futures lower on growth concerns, right? Amid spread of Delta variant, right? So we got a lot of Delta variant concerns in the news, right? Which could heavily impact multiple currencies around the world. So a lot of folks are watching the Delta variant and how it spreads, the rate that it's spreading. It spread pretty rapidly over the U.S. holiday break, right? So those are concerns for investors, right? So something to watch, right? As we saw with when the pandemic started, right? When that concern spiked, we saw a drop in the stock market, right? So all things to watch and pay attention to for the currencies and how they respond to that, right? But with those concerns, there definitely be growth concerns, right? So there could be pauses on interest rate increases, right? It could keep those the same because they're trying to make sure that growth doesn't stall, right? So all things to watch and pay attention to, okay? But we'll wait for that news at 11 o'clock on the pound to see how it impacts the market. Thanks for that note, Michelle. Any questions? Any questions on anything that we covered this morning?
No, thankful. I'm grateful for your patience. That was really good.
Absolutely, absolutely.
Ryan?
Yes.
So how soon after this session is over are the recordings available, and where can we find them?
Yeah, so if you go to Forex Factory, so in the community, right? If you go to topics,
Okay.
and then go to resource updates.
Got it. Okay.
Right, we have a list of fundamental news sites that we use. It's not an exhaustive list, but some of the hotter ones that we use, but Forex Factory is the one that gives you the news reports. So you can watch these and refresh your screen. And as those news events come up, you'll be able to, there'll be a refresh button on those and they'll update in real time. Right. So you can check to see them as they're happening. To see, right, once they update, we can then go look at the chart and see how the chart responds to it. Okay.
Oh, I was referring to our sessions here.
Our sessions. That's available immediately.
Okay.
That's available
Okay.
immediately.
All
Yeah,
right.
I'm sorry, misunderstood. And who was that? I'm sorry.
My name is Benson Brown.
Vincent Brown. Pleasure to meet you, sir.
Pleasure
And
to meet
welcome. The question was, do we get out of all pound trades before the news hits? Manage your trade accordingly, right? If you're in profit, protect some of that profit, right? I would protect some of the profit depending on the trade that you're in and where you got in, right? I would definitely protect some of the profit. If you're not in profit, something you might want to think about, right? Make sure your stop loss is where you want to be and you have it calculated so it's not open. But manage your stops accordingly, right? Because you could get spikes, could take you out, could push in any direction, we don't know. So if you're in profit, like I said, protect some of that profit. Depending on the trade and the pair, right? But we don't know how to respond. So as long as that your risk is calculated, and you followed your rules, allow it to do what it does. Just make sure everything is calculated so you're not overexposed. Thanks, 151. Said the session last night was great and extensive this morning. Thanks, man. We appreciate you, dude. Appreciate you showing up. Shauna asked if we're going to upload the trading plan example of interview in the community. Yes, we will get that added into the community. Yep, I will.
Yep. Ryan, one thing I'll say to that is just give it a little bit of time because we always let Casey put the spin on it, right? Casey is the genius behind everything as far as the way it's branded and the way it looks. So just give it a little bit of time, but we'll definitely get it uploaded.
Absolutely. Any other questions before we call it a wrap for the morning?
This was good. I'm looking forward to going back and kind of reviewing this live session again, just to kind of absorb some more.
Absolutely. Absolutely. And definitely make sure to review the training as well, right? All of them, but support resistance trend lines in the Fibonacci series to really get a good grasp on it. We show it from multiple perspectives, right? And within the full multi-time frame breakdown as well. So, but thank you. All right. So Benny talked about this last night, but we want to make sure that all of these concepts, right, are grasped by everyone. Okay. Because as we move into this fall time frame, right, things will start to move, and we're going to expound on some of these topics, right? Expound on the trading plan details, right? But things are going to start to move faster. Okay. The market, the volume, right, is coming back into the market. So these things are going to start to move. So some of those smaller sub fibs that we looked at over the summer, right, that we're able to play safely, we may not look at those. We'll just have those capital AB boundaries that we're looking to play because the market is going to be moving a lot faster with a lot more volatility, right? Which is phenomenal. We'll get a lot more trends, right? We'll get more AB boundaries. So things will start to move a little bit faster. So we want to make sure all of these foundational concepts are grasped so that everybody's on board as things start to pick up a little bit, right? Because we talked about seasonality. Generally over the summer, things are slower, right? And then as you get into the fall, volume comes back in and things start to pick up, right? So start to really hone in, right? Grasp those concepts, right? Grasp the risk management piece, okay? We're going to talk about some things in the Mindset Mondays going forward from a leadership perspective and the perspective of managing yourself, managing your breathing, managing your thoughts, right? Before you come into the market, so that when you're immersed in the information, right? Your self-talk is managed and you're focused on what you're focused on. So we got a lot coming for you guys, man. We got a lot coming for you. So continue dig in, continue showing up for yourself, continue asking questions. New folks, go back and watch the Mindset Mondays from June as well. Let's have some fun, man. Let's have some fun. All right. So Benny, you got anything for a closeout, man?
No, sir. Great session. Great session. Look forward to seeing everybody this evening. Like Ryan said, go back and watch the videos. The videos from today, like you said, are readily available, right, in the back office. So let's get at it. Let's go.
Let's
crush
go,
these
everybody.
markets this year.
Let's have a phenomenal day. Right in the topic section, right, you can view everything in a circle, mindset, and then previous weekly rituals as well, right? So Benny be on tonight at 9 p.m. Be on at 9 p.m., right? Continue showing up, everybody. You guys have a phenomenal day. We'll see you guys back at 9 o'clock.
Thanks. See you later.
Have a good one.
Thank you, Ryan. Thank you, Benny.
Absolutely.
You're welcome.
Thank you.